in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Well, Shawn, to say the least, the markets are in free fall is probably a good way to put it. Whether it's the stock market or whether it's the commodity market, this whole scare with the coronavirus thing has reached a fever pitch, no pun intended, and it's really affecting everything that we do. I mean, not necessarily just people's fear of what's going to happen, but we're starting to talk about supply chain issues. We're starting to talk about people, all these different things going on. So it's a big deal. So I guess talk about that a little bit and what you see happening out there, because typically when you start seeing in the stock market and you start seeing there's a run from something in the stock market, they usually jump over into the commodity market, and we're not even seeing that. So I guess talk about that a little bit, what you see happening there.
Well, I mean, if you think about the 08-09 crash, commodities and stocks both went down initially. And then the commodities started to bottom first and turn up first, while the stock market still struggled. So and even gold, if you remember, gold sold off in the early days of the crash because people just needed to raise money and cash and that sort of thing. So in the beginning part, it's sell everything while you still can. It's what we call the mass liquidation event. And so I think right now you're not going to get rotation in the commodities until until the market gets sufficiently priced for the worst case scenario, and then the commodities will bottom first and start to turn up as it anticipates first the need to. Because remember, all that's going on now, food shortages are building. Prices in, for example, China are rising, and so at some point you do need to refill food supplies, and so there is a slingshot effect here, but we're not sufficiently far enough in the process to get there, and so all we know to do, and whenever we've been in a mass liquidation event, is we just follow what the capital flows of smart money are doing, and we follow that closely, and they have been buying very, very little thus far on the corrections up to this point. When they start buying aggressively, when they really start, gap ups in buying, then we'll know that they are seeing orders starting to come in, or they're seeing people they're talking to saying it's ready to turn. And so we think the best way to kind of really look at this is to see when they are starting to get emboldened to buy. And maybe they'll start buying next week or two, I don't know. But up to this point, they've been very, very unwilling to buy, and correctly so, as the markets continue to fall. So right now, it's a time just to be patient and not to take any high-risk drastic action. But there is tremendous opportunity here when the dust settles, and it will settle. This is not a forever deal, but it's just in the heat of the moment, like you said, the fever pitch. It's, we're in it right now.
Yep. So a ton of stuff going on there. We are headed into spring here, so planting season's not that far away. The deep south is getting ready to go here pretty quick. I mean, we're starting talking about planting sweet corn and those kind of things, and making that run north. As you take a look at what's going on in the south right now, it's very wet. I mean, they've had a lot of moisture, just kind of like similar to last year, that East Texas, Louisiana, Mississippi, Arkansas, all the way up through southern Illinois, Indiana, all the way through there, up into the Ohio River Valley. It's very, very wet. Lots of snow, those kind of things. This time, about this time last week or whatever, you had an interview with the folks over there at Market to Market, and you had your regular segment there. And I was watching it here. You sent me a link, so I was watching and taking a look at what was going on there, and you made a pretty bold statement about the price of corn. So let's talk about that a little bit, and we've talked about that here quite a bit over the next 3 years, what that weather patterns are going to look like, and what we could expect, and how that's going to affect the weather. And so far, you've kind of called it so far up to this point. So talk about that a little bit, what you see going on there.
Well, nothing that's going on now changes the outlook. In fact, it actually enhances the outlook. And the reason for that is because think about what's starting to happen in many places. People are hoarding food. They're buying food. They're getting nervous. They're getting scared. Food chains are breaking down. So what could very well happen in this coronavirus is that a hoarding mentality grips the globe from a just-in-time inventory that we've been under for quite some time. If we do develop a hoarding mentality where you not only buy what you need, but you buy maybe 6 to 12 months of what you need, that increased demand at a time when weather over the next couple of years, as we've been talking about on your program for quite some time about what's happening with La Nina coming, the grand solar cycle, the significant increase in weather volatility, long, endless winter to cause freeze problems. And then on top of it, because it looks like we have developed an African swine fever vaccine, we could very well also be looking at Asia and China rebuilding their hog herd in a major, major way next year, causing feed demand to go through the roof. It is really the perfect storm of hoarding demand, feed demand, weather volatility, reducing supplies, conspiring to cause a wild slingshot effect. And remember, what have central banks been doing to try to offset this coronavirus impact? They've been putting trillions and trillions of dollars of money over the last 30 days. If you look at a rate of growth of the monetary base, of the global monetary base, it's absolutely going vertical right now.
Yep.
When the dust settles, all that money is going to be looking to go somewhere. And one would have to believe they like jumping on trends. And if ag markets are starting to trend back up, they are going to be kind of like in poker. They're going to be pushing some money in, pushing some chips in. And so I really think that sets up the scenario for a $7 or $8 corn market like we had in 2012 or like we had in 2007-8. As hard as it to believe that could be possible, this is our third time making that forecast. We've been right the first two, and we really think the outlook for that happening is extremely high that it will happen again. So,
well, I hope you're right, because that's great. The other side of that coin, though, is because of the weather, what you see happening here, and the things that we see going on. You still have to have a crop that you produce to get those commodity prices. And as I take a look at the weather patterns that we see happening here and some different things that were going on now, especially if we're going to shift over to a warmer, drier summer than what we've seen in the past 2 or 3 years, the idea of drought setting in can have a big effect on yield and quality, and that actually. Even though you've got some big numbers out there on the board, you're still going to have a hard time getting paid if you don't have a good crop. So,
well, if you have a half a crop and the price doubles, you really haven't gotten anywhere.
No, you really haven't. It's kind of the same spot you were. Yeah.
And it doesn't mean everyone will have a half a crop. I mean, but you're right. It doesn't. High prices by themselves aren't necessarily the savior. If you happen to be in an area that really took it on the chin, and that is unfortunate. But there will be a lot of areas that will not be the 50% down, that maybe will be 10 or 20% down, that can still gain favor. And by the way, not every year it's the U.S. taking it on the chin. Some years it'll be other. If you remember the last La Nina cycle, we had our time to get nailed in 2012, but Russia got nailed in 2010-11 and sent prices wildly higher, and our crops weren't great but good enough. So it's a mixed bag, but I will still take that environment, Casey, over the environment that we're in, where we just have prices that seem to just stay depressed, and even good production isn't enough to overcome it. I still will take that because there's opportunities still to generate some income, because it's not always going to be the same people getting hit every single time.
Yep. So today, this morning, I think it's around 11:30 or whatever it is, Central Time, the expectations for the weekly export sales report comes out. This report's going to get more and more important and have more and more of a light shined on it as we start heading down this phase one path, even though we should be well into that phase one path by now. But the coronavirus thing has a few, I guess, clauses inside of that contract, gave the Chinese a kind of a bit of a bereavement if some extraordinary event happen, and I would probably consider this to be extraordinary.
I would say so.
Yeah.
I would say a pandemic is, I think that's
pretty extraordinary. Yeah. So I guess talk about what you see happening here. So they're floating out some numbers out there between 800,000 and 1.3 million metric tons on corn, 600 to 900,000 metric tons on beans, wheat 400 to 600,000, soy meal, soybean oil, those kind of things are all floating out there as well. I mean, it seems like to me the single most remote bearish kind of indicators that come out in the market right now are more of a wildfire, downward spiral than any bearish news that we get. It's going to be a pretty big bear, I think, to get the markets to come up at all. So, talk about what you see happening there and what's your thoughts about moving in through today's report.
Well, I mean, when you're in a mass liquidation event, bearish news is fire bearish. Mm-hmm. Neutral news is super bearish. Bullish news is bearish. Right. Until you wash everything out. But, I think exports could actually surprise to the upside, not from China, but other countries who are worried about global trade shutting down further. Japan, what if they shut down quarantine and they're not able to, I think that while everyone can buy and ship at a time of great uncertainty, other buyers other than the Chinese may be very large buyers of U.S. food and U.S. grain, including the Mexicans, because of the potential for some dysfunction. I mean, people may worry now that we have our first case in California that maybe the U.S. quarantines certain places and doesn't ship product for a while. So I think the exports could be better than people think. Is that enough to drive the market higher in a mass liquidation event? Probably not, but it's enough probably to keep the grain markets more stable. I mean, you really look at the grain markets have actually been more stable than some of the other markets that are out there. Maybe that's the reason. Maybe the market understands that there's some pretty good orders coming in from other countries other than China to just make sure they get enough food before maybe things get a whole lot worse.
Yeah. No, there's a lot of stuff going on out there when you look at international markets, especially when it comes to wheat. Australia's been struggling with this hot, dry weather that they can't hardly get any. They've had wildfires and they've had all these different crazy things happen, and now it's completely switched on a dime. And now they're cool, wet forecast that's showing up over there, and to the point where it might even be somewhat of a detriment because they've gotten too much water now and they've gotten this too cool. I mean,
some of the pictures I've seen in some key areas, it's devastating flooding, if you can believe it.
Yeah, it's gone from just a 3-year drought to now we're having built.
And we've talked about this, Casey, about how this meridional jet stream does that. Just like that, it turns the dime and it reverses the extremity the other way. And this is exactly the kind of thing we're going to continue to see. And then, by the way, as an example, we talk about the deep south and endless rain again, but it just turn off, and all of a sudden, 3 months from now, they can't drop a drop of rain, and that's going to happen. Yeah. That's going to happen down there. So this is a symptom of why it's going to continue to be challenging to grow food globally, not just because of drought or flooding, but just because of the flipping of the weather extremes so fast and so quick. That does more damage to crop yields and crop quality than anything else.
Right. Yep. And so there's just the weather extremes have really gotten to a big pitch here. But we take a look at what's going on in the protein markets. I mean, the cattle have been limited down here last couple of days, and there's been a lot of stuff going on there, and the amount of cattle that's getting pulled forward. Sometime, somewhere, there's going to be a hole in the production line that's going to kind of increase prices. But I mean, what you see with the cattle market right now is all kind of stemming back from that coronavirus thing. But there's a ton of stuff going on there. So we've seen some pretty big swings in the last 8 months in the cattle market, from very, very good to very, very bad, and everything in between. Not really anything in between. It's either been really good or really bad. So talk about what you see happening in the cattle market.
Well, remember, cattle is an expensive food item.
Yep.
It's not a cheap food item, and if you're getting concerned about things, if you're getting worried about things, Japan I heard they're shutting down their entire school system this morning. We're concerned that our largest buyer of beef may come offline for a little while. People in the U.S. are worried that maybe their area is going to be in the heat of coronavirus spreading, and maybe some quarantine going in there, and maybe so on the margin. I think when you have that mentality, you cut back the more expensive food items because it increases your budget capacity very quickly. And beef is certainly one that could do that versus chicken or pork, which is comparatively much cheaper. And so it's a problem right now. And yes, there's a hole that will develop in every market. There's going to be this big hole that has to be fed later on in the year, and there's a slingshot coming. But for the beef market, we haven't gotten there yet. I think for the beef market, we have to get clear about what is going to take place in the U.S. Is this just going to be a spotty thing, like here and there? But it's you put your finger in the dam, but it's kind of, or is it going to spread? Is it really going to spread and become an issue? Because if it spreads and becomes an issue, then the cattle market demand domestically, could be in for a bigger problem. And because quite frankly, it's most of the demand for beef is domestic. Yeah. So that's a market that right now, the pork market's a little different. Pork market is, I think, in better shape. It already crashed. It already sort of reversed. It is a cheaper food product. And I think that probably the pork market already did its crash and burn and limit down kind of move. And cattle seems like it's just doing it in a delayed fashion. So it looks like cattle may have a little further to go before maybe it prices all this in,
Yep. No, that's probably a good summary there. Cotton is another thing that's been bouncing around. All these markets are just getting beat up by this stuff. So Cotton market is, I don't know, they've kind of come off of a kind of somewhat shaky year, and it feels like they're going into a little more uncertainty, I guess, the best way to put it, moving forward here. So talk about what you see happening in the cotton market. Cotton's
an economically sensitive commodity. We've talked about this in the program case quite a bit. When people are quarantined, when 50 million people are quarantined in China, they do need to eat, but maybe they don't need to go buy a new pair of pants or a new shirt, or that's just not something you absolutely positively have to do anytime soon. Especially if you're worried about economy, you're worried about your job, you're worried about your income. Buying all new clothes is just not a high priority, and so cotton is especially sensitive to the coronavirus, whereas food items like wheat or rice or things that people need to eat, they will have to come back and buy them no matter what. That's what their budget will certainly be used for. Maybe not, buying clothes right away. And so, and with China being, of course, one of our largest, if not the largest buyer of U.S. cotton, and they're offline, it's a problem, Casey. It's, it's like a broken record here and keep saying it's, but in something like cotton, it's really a problem. It doesn't mean that demand could stay away for quite a while. Yeah. So I wish I had I wish I had better news. And the problem that I have with most markets right now is we're not seeing the insiders, the smart money, jumping on and buying yet on these corrections. If we started to see that, I would start getting a little more comfortable that maybe we're starting to overplay this and starting to get, we're starting to overshoot things, but we have yet to see that, which says to me, they're not seeing orders yet.
Yeah. So you're saying we got a while then?
Well, a while. I think we have more time to go, but I think the way markets work, my experience is when they start to go down, they could really they fall rapidly. So it may not be that we have a long time to go, but we may have a lot more to go with price in a very short time frame. So maybe it's a 2-week crash, and cotton goes down to 55 cents where it was 6 to 9 months ago, and that ends it. So I'm not sure it's the elongation of time, but it may be that the market is in a period where it's just going to fall really. I actually would prefer that it just falls, gets it out of the way, gets it done, cleans it up instead of kind of meandering and painstakingly going down. If you're going to do this, get it out of the way and let's move on. Let's go to the other side as fast as we possibly can. I have always found that's a better way than kind of gradually just causing torturous pain on the way down, Yep.
No, I'm with you. Just get it over with and rip the Band-Aid off. Yeah.
Yep.
Rip the Band-Aid off. All right, so let's talk about sugar. Sugar is still slow but sure on the rise, and we've watched it go here. Last time you were on here, we talked about kind of some stuff we saw happen in the 70s where, the price of sugar was way up there, got off the charts, and we're seeing something again. If the weather patterns continue the way we've seen them, especially if we switch over to a more hot, dry kind of time frame. In most of the areas where sugar beets are grown, they're mostly irrigated, but there's still some areas where they're not. It's not so much how hot you get it in the summertime; it's how early the freeze comes because it's a late harvested crop.
We learned that last year, right?
Exactly right. Yeah, yep. So you look across the spectrum, those areas that are key sugarcane growing areas are still having some weather issues that they're still trying to fight through. I feel like, again, it kind of goes back to if the price is twice as much, you only raise half the crop, you didn't really help yourself much. So I guess talk about the sugar market and what you see there.
Well, the sugar market has held up better than a lot of other ag markets because I think we've had such a significant supply contraction globally. Not just, it's been the U.S., it's been India, it's been Thailand, and all these key areas. Brazil has made record amounts of ethanol and deprived the making of actual refined sugar. So because of that, it's kept this market better supported. It's not going to be immune for sure, but it has been held up better. The big thing that we continue to look for, you talk about the 70s where we saw 60 cents as sugar for a little while, and then we had a second rally later in the 70s that went to 40, 45 cents. And you think of sugar at 14 cents and that kind of a move. But the key for us in terms of sugar is can or will the desert locust move into India? It's moved in, and obviously Africa's been devastated. The Middle East, absolutely been devastated. It's now moved into Pakistan. And Pakistan's has put a state of emergency out because of it. Last time I checked, Pakistan is bordering India.
Yeah, they're pretty close to each other. Yeah,
they're pretty close. So I think the odds are increasing that this desert locust could move on into India by May. And that's all the research we did is if it moves in there by May, there's really not much that can be done to save crop problems, especially for the sugar crop. And so we really would be looking for that clear indication that that desert locust has moved into India. And if it has, their crop could be, because it has the potential to cause something like we haven't seen since the 1970s. We could get something like that. And it's a very real possibility because no matter what's going on with the coronavirus, if India has a half a crop at a time when we're already running 6-8 million metric tons of deficit, I don't care what's going on. That is a wild, crazy, force majeure kind of market. You know what I'm trying to say? Mm-hmm. So we would really, if you look at the calendar, we're not really too far away from potentially being there. So any setback in sugar as a fallout from the coronavirus, we would be looking for opportunities to buy that market. We think that market specifically is in an unusual position that most ag markets, you really can't say is quite like that right now.
Yep. No, absolutely. All right, Shawn, good stuff as usual. If folks want to reach out to you, get some information about what it is that you have going on over there at Hackett Financial, what's the best way to do that?
Hackett Advisors, HACKETT, advisors.com. Our homepage is all kinds of interviews and podcasts and white paper downloads and things that people can get a good look at what we do to see if we might be able to help them with their ag interests.
Absolutely. All right, Shawn. Well, good stuff as usual. I'm Casey Seymour with Moving Iron Podcast. Make sure to check out my social media at Moving Iron LLC on Facebook, Twitter, Instagram. Also check out my website, movingironllc.com. Get some good information in there about the upcoming Moving Iron Summit in Nashville, Tennessee, September 1 through 3, where you can see Shawn Hackett talk about all the fun stuff he talks about here on the podcast. Also, make sure you check out the Global Ag Network and all the great podcasters that are part of that. And thanks to Dawson Tire and Will for being a sponsor for this podcast. So until next time, I'm Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time time again. Through the years you'll find us here.